Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, November the 14th. The year's 2023. Let's talk trading. Some things never change with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, today's topic, some things never change. I was reading something, and it wasn't about trading, but it made me think. They were talking about, how you can just count on some things never changing, whether it was 500 years ago or if it's going to be 500 years from now, and human nature being one of them. So I just thought it might be a good thing to discuss with the traders some of the things on the chart that just don't change.
Yeah, it's so funny that you say that, because I'll go biblical on you for about 2 seconds here. And in the Bible, it goes and says that there is nothing new under the sun, not one thing. And that doesn't mean that there's not new inventions and things like that. But what it's talking about is that human nature. The way we act now, unfortunately, as a whole, as a society, as a people, that doesn't really change that much. And I think there's there's a good symmetry to that, to trading, because you know what, we're people and we do the same dumb things over and over again. We do some really good things, over and over again. But for the most part, things just don't seem to change very much, And I think that's the reason why you can make money trading, because of that. Because people are going to go and do the same things over again there, and so you can make predictions. It's sort of like, if you remember, earlier when it broke the 75 after that big run up from that news event, right? I went and said, this thing is going to go to the double O. And it took its time to get there. It took about a half hour to get there. And with some ups and downs, but it just, it was just a question. And it got there and it ran up that 25 pips. And if you remember, I was in one or two trades. I think I was in one trade, and then I had to go and average in because it ran back down to where my entry was, and I wanted to go and take advantage of that. So I put in a second trade, and I reiterated to you, this thing is going to go to the double O. And lo and behold, I think it hit the double O with my broker before it hit the double O with your broker. But, the reality is it went and did it. Why did it do that? Why did I think it was going to do that? Well, because the dollar has been very, very weak today. The pound has been, I don't want to say strong, but stronger. That's certainly for sure. And it just made sense that, hey, people like to go and put stops and TPs around that double O. We're heading in that direction. It made sense that it's going to want to go there. And that's just someplace that it's going to repeat itself. And so it did, and then I went and, an additional trade later, I went in at 15. And the reason why I went in at 15 was because there was a flip-flop box in that area. And I said, this thing's going to 25. And sure enough, it went up to the 25, and eventually it got almost up to the 35. Again, why? Because I just know that those psychological numbers are something that's repeatable. There's nothing new there. We just know that that's what's going to happen. It'll happen consistently. And then, of course, the other thing that was consistent in all of it, which is not a bad thing, but it's going to sound bad, and that is that, in each of these trades I made two, three pips. One trade I made, I think I told you seven pips or 6 or 7 pips, something like that. But for the most part, that's all I made on it. Meanwhile, I didn't even get nearly to where I thought the price was going to go to. And so it sounds bad, like you could have gotten another 10, 12 pips on it. Yep, I could have. But the thing is, that's not part of my trading plan. So I guess I needed to go and stay within, my trading plan, because that was more important, even though I was pretty certain that where the price was going to go.
Yeah, because you can pretty much say, okay, we're near the 25. It's either going to go to the double O or the 50. I mean, we just know it's just a matter of which one first and how long it takes to get there.
Right. It may even go to both of them, but the thing is what you got to do is you got to sort of like, I said to you very early this morning, when we first got on the phone, that I am biased long. I don't know why I'm biased long, and that was before the big move up.
Yes, that's true. You were biased long.
And it got me into trouble a little bit, because I was so biased. I was just looking at the chart, and I can't tell you the reason why. I really cannot tell you the reason why, because yes, we had a green day, and we were at that point, I think, up maybe 50 or 60 pips for the day. So, it wasn't, there was obvious signs, but to me, it just looked like, hey, we're going to go and we're going to run up. By the way, we're sitting at 31.8 right now, which breaks that free ball from about 6 days ago. If you put a free LZZ on a daily chart, it's breaking that. So if it breaks this area here, the 50, you just said, we're going to go to double O, we're going to go to 50. Well, if it breaks this area here of about 30, 35, 36, 37, something like that, more than likely it's going to go to the 50. It's going to go to the 50. It's just, the reason why is because basically if you look to the left, you get clear skies all the way up. Again, that's the type of thing where, it's repeatable. You see that consistently, so it's either going to go in, what's repeatable here is either it's going to fail at this point or it's going to break this point and run to 50. Which is it going to do? I don't know. I really don't know. The one thing I would say is that you have 169 pips for the day, that puts us at 90% in the 90th percentile. So we're kind of ranged out to a certain extent, but at the same time, it's also only 9:30 Eastern time right now as we talk. So it's got plenty of time to go do something. So we'll have to wait and see. But, it's sort of like, we're at a point, wait for your trade, and take the chances.
Yeah, I'm switching over to the 30-minute chart, looking at the fib lines. So a 10% retrace would put us back down to 2409, and it's one of those things like, do fib retraces stay the same?
Yep, they do. And that's the thing. What you got to do, what we have to do is because things do repeat themselves. That's what we have to go and base our methods on. Take advantage of the things that don't change on us. That's the advantage. That's the thing that when I first started listening to some of your videos way back when, and that's one of the things that I really appreciated about you. One of the things that you said early on, and I know you repeated since then, is that if you go and draw a horizontal line, the horizontal line is there. Okay, it doesn't move around on you. The only way that horizontal line moves is that it doesn't move. You may get the opportunity to draw another one because of another reason. But the line itself doesn't move. The 25 line does not move. The 25 line is concrete. It can't move. And because of that, you can go and measure movement from that line, either towards it or away from it. And so you can take advantage of that. And because of that, you have something that's repeatable.
Yeah, like the monthly inside bar was basically at the 1.2400. And so
Right.
that's good. That's been good for about 28 pips right now. Just something, simple as waiting for those or trading at those inside bar lines.
Right. And you can take advantage of that, which is a good thing. That's the thing about trading. You got to take advantage of those things, and as they come up, you take advantage of it. As you like to go and say, you place your bets.
Yeah, and
and you see what happens.
what's funny? We've got more pairs over 100 in range than not. And believe it or not, the pound comes in second. The pound Canadian's at 179 range, and the pound dollar's at 178. I find that kind of interesting. Pound Canada.
That's kind of flipped.
Never, it's like hardly, I don't even think I've mentioned the pound Canadian dollar in years. Can't remember the last time that's really, done anything mentionable. But you can see the buy zone here. once again, price moving away from the daily open.
Yep. Now we're breaking that 35 area right now, so we'll have to go and see.
Yeah, and then, so red rats, you might want to get ready because the range is definitely large enough, but we've got a freight train happening right here.
Yeah, you gotta wait. You gotta wait for the train to stop.
Yeah.
And that's the thing about trading that zone is the fact that I think some people get into trouble with that because look, I'm at 170 pips range for the day. Okay, I'm at the edge of it. Okay, now let's go short. No, no.
Yeah, well, yeah,
the trade.
The Bambino Flex indicator indicating a long, and the pivot trading plan said, near the pivot to go long, and we haven't even hit today's pivot, but it said bias near R1 was short. Well, it worked the first time, but we're actually past R4 right now on the daily.
Right.
We're past R1 on the weekly.
Right. And we're sitting, where 50 pips away from the indicator 2 on the M30. So certainly we're overbought at this point in time. There's no question about that. But the thing is, you still don't go short on this because you got to wait for something that makes sense, that says, okay, we've now gotten to the point where everybody knows we're overbought. But the question is, when you go short? Well, you got to wait for a trade signal that goes and shows you that things are now starting to turn around in the other direction. And I don't just mean a 1 minute candle closes black. We need probably a little bit more than that based on what's going on right now because of the freight train idea. Everyone knows I love to go and trade at flip flops, but I'm not looking to go short here. Just not until this train run ends.
Yeah, it's moving. In fact, we are past the ATR zone by a bunch. The ATR zone, the top of it was at 2387.
By the way, we're only 5 pips away now from that 50 that I called out before. That it broke to 35.
Right. Yeah, this is definitely a freight train. And one of the things that I noticed it's like when you get these big candles, the next candle is usually going to be a big candle too, just on the momentum. And so you have to almost wait another candle before you really want to look for a short.
Right. Yeah. Now the thing is that candle, maybe a big candle with a big wick on it, because it actually starts to come back.
Right.
That's okay. But that because that's usually when you see that, let's say it was ran up with a big candle or several big candles, and the next candle is a big candle up, but then it manages to maybe still close up, but with a big wick on top. That's when you start saying, okay, this thing is now starting to run out of some juice. It doesn't mean that it has run out of juice. It just means it's starting to run out, and now we can start saying, okay, now let's go and start looking to see when it's time to go and actually to short it.
Yeah, and you know what? It's funny, you have to tell the traders, we got so excited yesterday, we ran out of time on the video.
Yeah, and now we're pretty close to running out of time right now as well.
Right.
But but the thing is, I said that there's good chances to go to 50, but we got, at least on my chart, then we got up to 48.1. So
I got 47.3 here.
Yeah, that's it, but it's close, Yeah. Close.
So, fellow traders, some things just never change, and as Walmal said, once we find out what they are, we can use those and take advantage of them, exploit them, so we can be profitable. So, if you have anything that you think other traders might benefit from that never change, give us a reply in the comments there. And when you're sitting down to trade, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.